It's here. Hi, I'm Laura Meyer-Schmitz from Mulberry Business Solutions, and the end of the year is around the corner. So I wanted to talk a little bit today about one of the really common mistakes that can leave you vulnerable to potential audit risk. And that is not claiming all of your income or missing a key source of your income. I have a lot of clients these days who are trying to make it really easy for everybody who ever wants to pay them to go ahead and pay them. So they've got Cash App and they've got Venmo and they've got PayPal, and they use all of the features to try to catch that money however somebody wants to pay them. Several merchants. It's all a lot of different directions of money coming at you, and it's really easy to miss some of the details if you're not recording that properly. So what are some of the risks? What are some of the problems? First of all, each of those entities reports how much money they collected on your behalf to the IRS. So PayPal is going to tell the IRS how much they collected for you. And if you don't file something similar to that corresponding income, then that is a red flag. That would leave you open for some audit risk. Second of all, if you're not carefully tracking that, you may be missing some of your deduction opportunities, because a lot of those services and programs, you know how they work. They collect $100 and then they slide about $4 off the top for this fee, and then they put another $14 off the top to something else. Perhaps you get a short-term loan through them. I've seen those going on. And so you're not seeing $100 deposit in your bank account. If you're not capturing all of the nuances of that transaction, you're missing out on some opportunities for your deductions, because obviously those fees are deductible. So you do want to make sure that you understand the exact terms and the very detailed nuances of each transaction of the deposits coming into your bank account, so that you're able to capture every bit of that for your accounting purposes. If you don't capture those, you may not even notice that perhaps some of those are charging such high fees that you no longer want to use them, or some of them have such a burden of record keeping and process associated with it that it no longer is worth your time to utilize that. When I've had a lot of clients coming to me with these sorts of setups where they're collecting money from every which angle and every possible avenue, we do try to talk about what are the most useful ones? What are the ones that are really, really serving your clients, really, really serving you? And how do we narrow to the ones that can serve everybody the best? We certainly don't want to lose a lot of sales because we've closed one of the avenues for payment. But the truth is, people will find a different way to pay you when they want or need your item or services. So we can try to be thoughtful about the platforms that we're going to use, make sure we understand their terms, their fee structure, their processes, and what that might cost us in time, energy, and or data to record that properly, so that we're choosing the best suite that streamlines your processes but still allows you to capture as many sales with the best user experience that you can get for your clients. So those are all conversations that we have during the VIP Accounting Overhaul in a day. A lot of my clients find that once they really focus on what the details are, they decide that some of them just aren't working the way they'd like to anymore, and we come up with a much better solution that suits both them and their clients' user experience. Give us a call if you have any questions or concerns, or you think you might be missing some of your income on your tax return. If your records and your processes aren't holding up and you're afraid that you're leaving yourself open for potential audit risk. Thanks. Bye.